Peter, how have your funding needs and the strategies you use to meet them changed as a result of the COVID-19 pandemic in terms of the products and the investor basis that you're looking at?
Yeah, actually, we're a sort of a very boring bank, even in this COVID-19 crisis. We've not really changed our strategy. We've seen slightly increased demand for credits by our bank, but our funding needs have not really increased a lot. So we mostly stick to our current funding program. At the start of the crisis, we've seen the liquidity in the market diminishing something, but it has come back relatively quickly. So yeah, we will more or less stick to our funding program by issuing a number of benchmark bonds in the market in euros as well as in dollars throughout the year, and reopening those bonds regularly, and funding in other maturities and other currencies if possible.
Excellent. And in lockdown, well, once we're out of lockdown, how do you expect the bond market, the way we conduct business to change?
I think what we see, we're now all working from home, and we have to do video conferences instead of regular conferences and regular meetings. So I think already before the COVID-19 crisis, at least we were looking at traveling less and doing more over video, also from an ESG perspective. So we have an ambition to reduce our carbon emission footprint. And for our last ESG bond, we already did all the investor meetings over the phone or through video calls. So I think that will certainly remain and probably be more widespread, as I hope that also more investors will now in lockdown get more used to video calls. And I think it will never fully replace physical meetings, because especially if you meet someone for the first time, it is different to meet someone in person and on the phone. But especially for follow-up meetings or for conferences, I think this is a great substitute. And I think another important aspect is that we find that in my dealing room, from all the processes that we do or all the products that we do, the primary bond market is still the least digitalized and automated process. And also there were already initiatives have been taken, and I think that will certainly continue. So I expect to see, especially in the document flow, we now see it's very difficult to have physical documents and physical signatures when people are working from home, and there are already great solutions for that available. So I'm sure that we will see an acceleration of implementing those in bond markets. And I think also other processes like the digital generation of term sheets, and I think a more platform-based execution in bond markets, instead of sort of calling to be in the bid book, that will sort of all be accelerated by the current way of working, where digitalization and automatization is certainly increased. At least I hope to see that, because I definitely would like to see more efficiency in primary bond markets than we have now.